So let's see how it pans out through the course of the day. But we were talking about MphasiS. That stock is under pressure in trade after their Q3 numbers come in below estimates, with revenue growth lower than its peers. To discuss this underperformance and understand the road ahead, we now have Nitin Rakesh, CEO and Executive Director of the company, joining us now. Mr. Rakesh, good morning. Thank you so much for joining us on CNBC TV18. Well, I was going through your numbers, and this time around the constant currency revenue growth has been lower than peers. The others have reported a growth of around 5 to 6%. For you, it has been 1.6%, and it is lower than the last quarter as well at 6%. So what happened this time around? And you expect it to improve from the quarter that'll come by, that is Q4.
Yeah, I think what you have to do is kind of look beneath the numbers. Two things are going on. Firstly, I think we had a highest sequential growth in 10 years last quarter. Secondly, I think the direct business, which is where really what our focus from a growth standpoint is, has actually grown at over 5% this quarter sequentially and over 19% YOY in Q3 as well. So I think if you look at that metric, which is really the way we are devising the business and organizing for growth, I think we're actually fairly pleased with the way the business has panned out. We do have a fairly strong deal wins momentum. We have a very strong pipeline even today, even after converting record, TCV in the last 3 quarters. So on a YOY basis, our TCV wins are up, almost 65%, and on a YOY basis, our pipeline is up another 50% on top of these wins as well. So I think our trajectory for growth is very solid, very strong. I think the real story really is the underlying, business mix that we have effected a change on, in order of prioritizing the growth in the direct business to an order of magnitude that is actually growing well ahead of the industry. Even at an overall level, I think on a YTD basis, we are still in the top quartile from a growth standpoint.
All right, Nitin, we get that point. What Sonal meant was that, growing well, yes, in the direct business, and also your deal wins are very good. I think $200 million plus for the second quarter. So we get that point. It's not translating really into revenues. It's not reflecting. Why is that? Because your DXC business is struggling. Tell us, do you expect that business to stabilize now? You have that minimum, revenue that's expected for the next few months. So do you expect that business to stabilize? And also, there are talks that DXC itself will get taken over. So there's a risk, right?
So Nigel, it's difficult for me to comment on talks or rumors or uncertain events that I can't, predict. Having said that, I think it's a combination of two things. Some of the restructuring of the portfolio was conscious. I think for the longer term, better, focus on direct business yields better results. And that's the reason why we've used the last 9 months to kind of start the restructuring process. And in many cases, prioritize growth in direct, both from the standpoint of profitability as well as from the standpoint of long-term growth. I think in terms of the outlook, all things being equal, we definitely have, I would say, fairly, we're in the zip code of stability, or fairly stable outlook. We have deals that have been signed in that segment as well in the recent past, and we do believe that as we go forward and go past even the MRC construct that you referred to, we should be able to sustain a longer-term revenue profile with the client.
So, Nitin, let me take this question only ahead. Nigel was also mentioning it that DXC revenues, the minimum commitment, is set to expire in September 2021. And you've been seeing growth declining in the last couple of quarters in this particular segment. Can you give us a number in terms of growth, what you're expecting, especially after the September 2021 deadline ends?
I cannot actually, unfortunately, give you forward-looking growth at this point in time, only because I think the way we thought about and the way we position this business is very simply, as we get past September 21 timeframe, we still have a long tenure for our contract to be in place, and we have an 11-year MSA starting 2016. So I think just like every other customer, we will continue to have visibility in this channel as well. We have talked about the fact that we are now signing deals that go past September 21, so we do have increasing visibility in the longer-term tenure. Unfortunately, I can't give you a number as of now, but as we get into FY22 and closer to the September timeframe, we'll definitely be able to give you a number.
Nitin, give us a number on margins. That's the bright spot in your numbers. That look good. Can you sustain these margins? Are there headwinds, or do you see some offshoring business or something that helps you in terms of tailwinds?
So Nigel, I think there is definitely upward bias in the margins. We have, I think, every KPI, and I think you mentioned TCV wins to second quarter of 200 million. It's actually the fourth quarter of over 200 million deals. We've actually signed two of our biggest deals this year, over 200 and over 100. So I think from that standpoint, that does provide some operating leverage. But we have managed the margins in a way that we take some of that operating leverage and invest back in the business. So from every KPI perspective, gross margin, EBIT margin, net margin, I think all of those have tended up this quarter, and we do believe that we have the ability to sustain. In fact, there's a little bit of an upward bias in that margin profile.
All right, Nitin, final question there, from my end, and I need to ask you this because there are so many rumors that the promoters looking to exit. Is Mphasis up for grabs?
Nigel, I've read what you've read. I think beyond that, there is nothing for me to comment on. You're a well-governed, board-run company. If there are any, updates, we are obligated to inform the market, and we will.
All right. Okay, Nitin, thank you so much for joining us with all those details. Wishing you and your company all the best for the future growth and outlook for the company. And now it is time for the CNBC TV18 budget quiz.